Greetings, folks. This is DC Investing. I've reached financial independence, and I'm talking about topics that can help others on their path to financial independence. And as you can see around me, it's fall. The leaves are kind of turning orange. Um, the weather is definitely cooler out there. I've got a jacket on today. And, as I kind of look towards the end of the season, the end of the year, trying to figure out, what's the best place to kind of focus on some investing. And overall, I think if you're on a quest to reach financial independence, the game is all about, you know, living beneath your means, trying to save as much as you can, and then taking those savings, don't leave them in a bank, but try to invest them in things that will have a positive return over the next long while. Personally, I really like dividend paying companies um, that have decent dividends and chances for decent growth. I like those because you can just sort of put your plan on autopilot every time money comes in. You got to purchase some of these different stocks and investments, and just know that over the next year, over the next 5 years, over the next 10 years, they will just continue to provide returns to you, regardless of what the prices do in the markets. So that's kind of the way that I kind of look at it. Several of these companies have been somewhat weak over the past, since I guess the start of the year this year. But in some cases, that's made the dividends actually go up. And there's quite a few companies that you can get a pretty decent yield from right now. Um, and I like the energy sector, but there's a lot of consumer staple stocks that have pretty decent dividends right now. Things like General Mills and Campbell Soup and Smuckers and Conagra Brands. I think Unilever might have gone up to the point where it may not have as strong of a dividend. But if you assume that all these brands are going to be around for a long time, you can just purchase these and harvest the dividend over long periods of time. All those names have been really weak this year, kind of out of favor as all the AI things have sort of taken off. And right now, as of today, we've had a couple really good days in the QQQ fund that tracks all the technology names. Most likely, we're going to have a decent run up towards the end of this year. You never know how high technology names can go. And I remember kind of being in the last part of the 2000 tech boom, just watching what was happening in the markets really was incredibly euphoric. I watched Yahoo go up 20% day after day, and 10%, or it just went up exponentially. As well as several of the other names like Sun Microsystems. And what we're seeing in the AI sector right now, it has been a strong growth sort of sector, but it's definitely not an exponential blow off top like what I observed in the year 2000. So, if you, at some point, most likely something will happen and it'll bring names down back to earth again. But what that will be or when it'll happen, I never know. As I listen to various podcasters, they're sort of saying, it's really hard to pick a top because you have to be exactly right. And if you say things are going to crash, but you're a year too early, it's the same as being wrong. Or if you say this is going to crash and you're 2 years too early, it's still the same as being wrong, because you miss some really hefty gains towards the end of a market rally. Um, so most likely it'll be interesting to see what happens with the Fed funds rates this week. Most likely they're going to cut a little bit. That'll be a tailwind to the stocks. We're in the seasonally strong period of the year. Hopefully you get good consumer sales through the end of the season. A lot of companies will be buying stock. So all of those things should kind of create a tailwind towards the overall market. And it may be a good time just to sort of invest for the short term in some of the more aggressive things like the QQQ, or you could just do the S&P 500, or even possibly even dabble in some of the leverage funds that kind of amplify those moves. We'll see what happens towards the end of this year, but I think the scary October season is now about over. Hopefully we don't have any major black swans that occur in November, December. Somebody like China or Russia doing something crazy, or America doing something crazy, starting wars. You never know when that may happen. But overall, it's a good time to just continue to save as you get a little extra in your paycheck. Put it to work in something that is fairly stable, that will provide dividends, or if you think the markets are going to increase quite a bit, put that money to work, make your money work for you, so that slowly over time your overall balances increases to the point where eventually you have enough funds that you don't have to work anymore. So I don't know. Those are my thoughts. Like, subscribe. Thanks for being a viewer. Hopefully these things help you, and we'll see you. Bye.